stock market. Oh, man. Woo!
Palantir's earnings. Good morning, everybody. Welcome back to Strong Man Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a fake Boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. Go buy my book, bro. And holy smokers, we got some Palantir, my Palantir earnings to look at. Now, we all know Palantir's future, bro, right? Why? Because it's secretive. It's mysterious. It's got revenue by avenue. So apparently, Palantir just published their earnings. I haven't seen the 10Q yet, but we have enough information to look at this. And Palantir's down 1% in the pre-market. Oh, my God. I thought it was going to go to the moon. Now, Palantir is a company that helps other companies save money through software. But Palantir itself can't seem to be profitable. It's hard to be profitable, bro. So the bull thesis behind Palantir is, basically it's unique and their revenue's crushing it. And at some point, they're going to become profitable and blah, 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 blah. And, it's founded by Peter Thiel. Oh, my God. But I have some reservations about this company. And I say it all the time. It's because of stonk-based compensation. They dilute you to kingdom come. And the market doesn't like that. The market has absolutely crushed this stock. And it looks like the market is going to hurt it a little bit more today. We'll see. You never know. Maybe it'll go up 50% later. We beat expectations for revenue by avenue this quarter and expect to have a strong finish to the year, even in the face of continued strength of the U.S. dollar, said Alexander C. Karp. What if his middle name was Karp, too? Alexander Karp. Co-founder and chief executive officer of Palantir Technologies. Okay. So Q3 highlights. Revenue grew 22% year over year. I thought it was going to be 30% year over year, man. What happened to that? U.S. revenue grew 31%. U.S. commercial revenue grew 53%. And government revenue by avenue grew 23%. Total contract value closed of $1.3 billion. Now, if you sign a contract, right, you have to recognize the revenue over the life of the contract. So if Palantir signs a bunch of billion-dollar contracts, you have to really dive into the weeds and see how long is the contract, because that's going to help you calculate what the revenue is going to be. They're not going to recognize $1.3 billion of revenue because they signed a freaking contract on the day one, okay? So why don't they have $1.3 billion of revenue? I don't get it. So basically, Palantir, they're growing revenue, not as fast as, people thought they were. But we see here, loss from operations. Oh, they lost money again. Let's go look and see if Palantir has ever made money, because nothing excites me more than a company that just loses money hand over fist every single quarter. Negative. At least the negatives are getting better. Profit margin, negative. Okay. However, I know this is a clown stock because whenever somebody says adjusted income, they're basically taking the rules of accounting and they're just just making up their own crap. It's adjusted, bro. My adjusted income is, I don't include every expense except the expenses that I want to include. Oh, look, I'm profitable. Adjusted income from operations of $81 million, representing a fake, fallacious clown margin of 17%. Cash from operations of $74 million, representing a 10% margin. So what is the price? Do they have price for operating cash flow here? Let's see. What is their trailing price to operating cash flow? So for their operating cash flow, you have to pay, at least as of today, this probably hasn't been updated yet, $56 for $1 of operating cash flow. Wow! And price to free cash flow of 62. Good deal, bro. but they have a good balance sheet. You know what I'm saying? So let's go ahead and look at the financials, okay? Because that's what it's all about. All this adjusted crap doesn't mean anything. I don't care about this. It's clown earnings, it's fake earnings, it's stupid earnings, it's garbage. Because all they do is they modify the rules of accounting, which properly match expenses to revenues, to make themselves look better. Okay. So revenue year over year is up. Gross profit, let's see what their gross profit margin is. 370 divided by 477.88. Oops. 477.88. Their gross profit is 77%. What is their historical gross profit? Gross profit margin is roughly in line with where it's been before. Okay, nothing bad there. Oops, what is this? Palantir. Okay, sales and marketing and research up. R&D not up as much. General and admin down a little bit. Total operating expenses, $432 million off of a gross profit of $370 million. So they lost money from operations. They've been dumping a lot of money into sales and marketing. Okay. Palantir commercials, bro. Loss from operations. Let's look at let me calculate their actual margin. So their actual loss from operations was 62191 divided by 477,880. Negative 13%. Let's see how that's compared historically. Operating margin. Okay, so they're basically where they were the quarter before. That's beautiful. All right. Now, their operating loss has been better and better. It looks like it's getting closer and closer. But why not just wait till this company starts making money, like actual money on the accrual basis of accounting, and start buying in when they stop this freaking stock dilution? No, you have to buy it now, bro. It's the future. I want my 20x gains. All right. Loss from operations. Other income and expense. What is that? That's actually something you want to look into. Because apparently their operating margin was in line, but they had another massive other expense, whatever that was, which really knocked down their bottom line profit. So their bottom line profit now, after interest and taxes and other expenses, was, let's see. It's so hard, guys. Oh, it just loses money. Negative 25%. This is so hard. So when people say, oh, they have adjusted earnings and they're positive, fake clown. They lost money. Okay. Let's go see. Weighted average shares of common stock outstanding using computing net income or loss. So this right here tells us how much they've diluted you over the last year. Let's see. 2073 divided by 1964. Oh, they've diluted you by 5% over the last year. Good deal, bro. Include stock-based compensation expense. So total stock-based, stunk-based compensation is $140 million, okay? Let's see what percentage of revenues stunk-based compensation is. It's probably, 25% of revenues? A little bit less? Let's see. 30% of revenue. 30% of their revenue has been eaten up by stunk-based compensation. And when it comes to accounting, when you have stock options, you have to expense them over the vesting period. And I think I read in another report that this is going to continue for a decent amount of time. Now, over the last 9 months, their stock-based compensation has been, let's see, 1397, 240, 31% of revenue. So it looks like stunk-based compensation is roughly 30% of revenues, however you look at it, over 9 months or over 3 months. Wow, this is so amazing. This is the trick they pull. Oh, we have cash flow, bro. They have cash flow because they freaking because they pay their employees with stunk. So here's the balance sheet. Total current assets 2.9. I don't think they're going to go bankrupt. Yep, they're not going bankrupt within a year, at least in my opinion. Let's see. Total assets, property, plant, and equipment has went up. Restricted cash went down. Operating leases probably were amortized or whatever, and other assets. And long-term debt, let's see, deferred revenue, customer deposits, leases. Okay, so overall, like their balance sheet's pretty solid, right? But then you go down and you look at why their book value is so low. Well, accumulated deficit. Over the history of this company, they have lost almost $6 billion. $6 billion. Okay. We go down the statement of cash flow, stock-based compensation. They would have been profitable had they not had stock-based compensation. But it's good that they actually recognize that because, it's because they could just hide all this dilution, and accounting catches that and reflects that in their financial statements. They're also adding back an unrealized gain or loss from marketable securities. So you look here, and they had a $260 million loss from marketable securities. My theory, and I don't know what the details are, is that I remember they bought a bunch of stupid clown stocks. Like they invested in a bunch of SPACs, garbage SPACs, and those stocks got absolutely annihilated. And when the stock prices of those companies go down, that gets reflected on the income statement. So whatever they invested in, which shows how clownish they are, they lost $260 million. So whatever stocks they bought crashed massively over the last 9 months. Wow. Good job, Palantir. However, net cash provided by operations, $144 million. They have positive operating cash flow, bro. And they have some free cash flow because, you take cash from operations minus property, plant, equipment. Okay. Let's go look at the dilution. Proceeds from the exercise of common stock options. They've generated $72 million in the last 9 months from stock options. So the employees exercise their stock options. They give the company cash, and the company gives them stock, which dilutes the shareholders. Okay. So overall, what has changed here, ladies and gentlemen? This company, from its inception, has lost money every single quarter. The only good thing about this company is revenue, my avenue. I don't get it. Could somebody explain to me why you'd want to buy into a company that just dilutes you hand over fist and whose revenue overall, it's not growing as fast as everybody thought it was going to. And they have to manipulate their numbers with clownish metrics to say they were profitable. No, I don't know. So we'll see what happens to the stock today. I mean, this is nothing new. Everybody knows Palantir loses money hand over fist. Everybody knows Palantir dilutes the crap out of you. And these earnings really don't show me anything different. So I don't know. What are your thoughts? Thailand, hello. Palantir will create generational wealth for all retail investors. It's the future, bro. Yeah. Strong man. Woo! What's up? I'm going all. You should, man. Sell your Baba. Buy Palantir. Palantir is going to the ocean. Palantir dilution is ridiculous. It is. Nothing has changed. And, like I said, why not just wait until the stock-based compensation dies off and this company starts becoming profitable? Then you can maybe invest in it, okay? Because there are some interesting things that go on with this company. But why do it now? 30%, it's crazy. It's insane. That's why this company's been wrecked. They are just diluting the company every year in stock base. They had to invest in SPACs. Yeah, I did a video where they invested in a SPAC. This is how stupid they are. What was that company? It was it was called Cellularity. And I'll look at more of the SPACs they invested in. They invested in this company called Cellularity, and I believe they gave them either $10 or $20 million as an investment. The stock tanked, and Palantir got a contract with Cellularity in return, where I believe they made $40,000 over like 6 years. So they invested $20 million, I think, in a clownish company, speculative biotech that got annihilated, which hurt their income statement. And in return, they got a contract with that company for $40,000 over 6 years. Wow, that's a great return on investment there. That's right. They bought clown stocks, and now they're taking losses. Exactly. And that tells you, what is the management doing? What are they doing? Only Baba JD is up. That's right. I'm a genius. Exactly what I'm talking about. Palantir dilution is insane. What was the dilution? It was like roughly 30%. The stock-based compensation expense was 30% of revenues, roughly. Still have no idea what they actually do. I mean, they save companies money somehow. I don't know how. Blah, 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 blah. Rip Carvana. I'll do a Carvana video, but I have to do it later. I'm going to buy Palantir at $4. I'm buying it at, I'm never buying it. 15 years to make $147 million in operations. And like I said, that's because they pay their employees in stunk. Chamath, the king of SPACs, stole money. He's a good guy, bro. But Jeremy and me, bro, told me to buy strong, man. Buy, bro. Buy. So that's my reaction. Nothing new. Massive stock-based compensation. Positive cash flow from operations because stock-based compensation. And revenue, my avenue is the only good thing about this stock. But other than that, whatever. Oh, and they bought a bunch of clownish stocks. A bunch of SPACs that are clown stocks. All right, that's it. I need to go to work. Let's do an outro, and I'll see you guys later. Cheers.
Bye. I know I'm a grifter strong, man. You could lick your hand and smack me in the nutsack. Thank God for Tesla Maesla and you, strong man.